Hey guys, I want to go through the markets today. As usual, it's Saturday, so this week I started seeing some concerns. So let's take a look at the markets. I'm using TC2000 here software. If you want to get a free trial or a subscription, you can check out the link in the description below. You can get $25 off if you decide to sign up for a subscription. So I've been talking about this, but there's been some downtrend concerns for a while. Then we started seeing rising bottoms here, and we got up above the 50, that we retested it. So this is a good spot. So I'm going to put on the lines I have here, and you can see that we had this uptrend here. And then whenever there's a little pullback, it's a good entry point once you see some buyers getting back in, pushing that up again. So we have this upward momentum down here. I have a price percent oscillator, which is like MACD momentum. And you can see that it's been rising, but now we're starting to cross. And we got close to the 200-day moving average on the NASDAQ. And you start to see these doji candles, which are indecision. And then now we're seeing follow through. And I've also got this red volatility stop. So you've got green, uses average true range. So it kind of takes into account the ups and downs volatility. And once you have that crossover, that's often a good sell point. And it's a place you could potentially put your stop, which avoids, getting stopped out. But it doesn't always work. Like here, you can see how it turned red and then right back the next day. And so there's other ways you can deal with that situation. So one way is if you buy at a low point right here, where it switches, you can use that as your stop until you see another established low, like a pivot point, and then move your stop there once you start to see it. So you can see a series of previous pullbacks. Some aren't very strong, so it's a little tricky to determine if that is a real low point. But if you have your point here, you wouldn't necessarily sell on the first red V stop. You would wait till this gets broken. But because sometimes you get a bit more pullback than normal, but you can use this 8 EMA, which is the T line, call it, or the red volatility stop crossover, and you're also breaking this uptrend, this right here, and the crossover of the daily price percent oscillator. So that's not a great sign right now, and we got close to 200 MA. So we'll see if this is a reversal. If we establish an uptrend again and we have a new higher low, then obviously, that's a good sign. S&P 500, now that got right up to the 200 and bounced. So that's often a place where things fail. Like we have here, we came down, we tried to hit the 200 and fail. We got up here near the 50, fail. And then this time we broke up through the 50. So a lot of times when you're buying, when you break up through the 50, the target is your 200 day, and then you kind of can sell and wait to see what happens. If it eventually gets through the 200, then you can get back in. But buying right near the 200 is a risky, underneath the 200 or 50 or whatever is a somewhat risky situation, because there's nowhere to go in that sense. You don't know if it's going to make it or not. Dow Jones, it got a little bit above the 200 and now it's pulling back a bit, but it's still a green volatility stop. It's right at that point. And but sometimes the slopes, the trends get broken, but they still go up. They just kind of flatten out. So a straight trend line can be used, but moving averages sometimes help a bit better with that, because it'll sort of take into account the fact that the trend might be slowing down a bit. So you can use other things like the 80 EMA here, or some people, the 21 exponential. But right now there's that little curl down, and it's not as bad as the Dow Jones, and we haven't crossed it with the momentum as well. So it's a bit better shape. So obviously the NASDAQ and IWM, Russell 2000 go up and down more than the S&P and the Dow. So you get more gains with those, but you also get more pullbacks, stronger. So that's the trade-off there. And if we go to IWM, you got just a little bit above the 200 and pulled back. Now we've broken this downtrend, red volatility stop, just about to cross this momentum indicator. So, it's not a great place right now. you could short this. And so I've got another column here, another tab called inverse ETFs. And that's where I put a bunch of ETFs that are inverse, and most of them aren't leveraged. I don't really, like at this point, you know, I don't want to buy the leveraged ones. So PSQ is a NASDAQ. You can see it's a green volatility stop, but to establish a new uptrend, you need a higher low. So it's not, you know, it's early in the game, but you do have a crossover down here. So, you know, some people would want to get in on that early entry above the 80 MA. But like I said, we've done that once here as well, and it didn't last. It just lasted one day there, but it got reversed. So we'll see what happens. And then you've got the SH, which is the S&P. Hasn't got a green volatility stop, but it's about to cross. RWM is the inverse IWM. DOG is the inverse Dow Jones. Hasn't quite crossed yet. There's other ones that are more volatile in terms of the gains and losses. Is the ARC Innovation. You can see that it's perking up with the tech sell-off. Bitcoin is another one in Canada. It's an inverse Bitcoin. And we just crossed this downtrend here. But, you know, it jumped up almost 10%. But, you know, we'll see if that continues to break down. But, you know, you are right at the 50-day here. So that's an option if you want to get into some of the inverse. So that's what I like about TC2000. I've got a lot of tabs here with a lot of data, and each one is different. And it's in a, you know, a lot of data in a short space. I've also got columns here that I've customized. Check conditions. So you have a condition column. If you go here plus, you can add a value or a condition. And so you can add conditions on any, you can click on one of these averages and create a condition when it's above or below, crosses over, you know, various conditions, and then you can use them in your columns just to get a quick checklist. I've got another tab called sector ETFs, and you know, on Friday you had a lot of commodity type stuff go up, but one interesting thing, a couple interesting things, is the US dollar is rebounding. That's why the markets are selling, because you have these, whenever you have these, it's in an uptrend, the US dollar, and now you've crossed this down little pullback here. And so that's going to usually mean a market sell-off. And another one is TBF. You can see that's 1.7. So this is mimicking the interest rates of the 20-year yield. So like TLT would be your bond fund, which goes opposite of the interest rates, but TBF is in the same direction as interest rates. So we're basically up to the 3%, close to 3% again, which is usually a bit of an important spot if we start seeing interest rates going up, because, you know, the idea is that the interest rates are going to continue to rise with the Fed. This doesn't usually bode well for stocks, and US dollar going up, like the UUP, is also hurting Bitcoin and gold, stuff like that. You can see that with the interest rates going up, that this has resulted in that pullback there. So there's not a lot of great options in terms of the, you know, the ETFs and stocks, but this is where you can use, you know, the sectors. You can look at 5-day, see what's kind of done well. Like I said, you know, you got to consider TBF and UUP. Those aren't really stocks or anything, but there's people buying safety type stuff as well. But like this one's food and beverage. It's pretty straight, very low volatility, but you know, the gains aren't great. 30 days, 7%, that's still good for a month, but there are some things you can get into. Utilities has done well, 10% in the month. And it's relatively low volatility at this point. And of course, the commodities are a bit of an up and down situation. So we had this recent uptrend here, and so there's possibility with natural gas and oil, but it is quite volatile. If the recession kicks in, you know, the people think the oil and gas will go down, but on the other hand, you have huge costs of gas in Europe, and there's not a ton of drilling and production. So I would keep an eye on that. XOP, you know, there was a little sell on Friday, but it's in an uptrend. So there is some commodity stuff. So you can see here, cotton is in an uptrend. So have a look at the commodity plays. There's generic ones that are, let's see, GSG, not great. They don't look great, but there are some commodity type. Oh yeah, there was this PAVE. It was doing pretty good. It's a infrastructure, so you know, we're right at that point where it could curl down, but if it establishes another low, another high, like a higher low, I mean, you could potentially get in, but you can see how this is curling down and it's up here quite a bit. So hopefully that helps. And from any of these ETFs, TC2000 has this great feature to open it up and look at the stocks that are in there, and then you can easily filter them. What I have is a default, so once you create your columns, you can opt to save the column set as a default, and then it'll open up every time you open up a ETF or any type of chart, a new chart, or a new scan or whatever, you'll get all your columns. So you could easily sort them by however you want, you know, based on your own chart, but also on your own like column list here. But you can also look at like John Deere, stuff like that within that infrastructure, and find companies. You could sort 30 days, a good one. It gives you a bit longer duration. And look at ATI. So, I mean, they've done really well. So that's where you can look at individual stocks. And US Steel started to perk up. It kind of bounced off the 200, but there's lots of options. So hopefully that helps. Don't forget, you can get TC2000 in the link in the description below. I use this every day for quite a few hours a day. It's a great program, very powerful. I've shown in a lot of videos alerts and various layouts you can do, scans, formulas to create your own custom scans, and check it out in the link below. Talk to you guys later.